Today we have a special guest. Kyla Scanlon is a writer, video creator, podcaster, editor, illustrator, and educator, economic commentator. She's written for the New York Times, New York Magazine, and Bloomberg Opinion. She's spoken at universities, including MIT and UC Berkeley. Go Bears. You can find her podcast, Let's Appreciate, on Spotify. You can find Kyla on X and TikTok at Kyla Scan, KYLASCAN. Most recently, she's published a book, In This Economy, How Money and Markets Really Work, available on Amazon and wherever you buy books. And yes, for my Chinese listeners, you can order it on JD in China. I'm really excited to have you on the program today. Kyla.
Yeah, I'm super excited to be here. Thank you.
Well, it's we love having economists on, and I know that you're a commentator on economics, but it seems like you know your stuff. I read about the first third of your book, so I'll be finishing it. But most people don't understand economics. It's very complicated. I don't understand economics. I only understand a layman's version. I try to get into it, but it actually is quite confounding. How compounding, inflation is measured and these kind of complexities. I thought we could start out slowly. How would you define inflation? Because that is the big term in America right now. And why is it important for regular consumers to understand?
Yeah, so inflation is a decline in purchasing power. So essentially, your currency goes less far. You're able to buy less things with that same currency. So I live in the United States, so I use the US dollar. Inflation impacts my ability to buy bread. The cost of bread goes up. My dollar can't buy as much bread, right? So that's the general idea of inflation. And in the post-pandemic economy, a lot of economies have been heavily impacted by inflation. So I'm sure if you go to the grocery store or if you literally do anything in the world, you've probably experienced higher prices. And that's because of inflation. And the inflation of the post-pandemic economy was largely caused by a misbalance between supply and demand. So not enough things, people demanding pretty much the same amount of things, that's going to ultimately drive up the price. There's a lot of different causes of inflation, one of those being supply and demand and a misbalance between that. There's also more and more information coming out about companies raising prices, raising them in order to maintain profit margins or to maintain how much money they're making as a company, other things like that. A lot of people will point to central banks potentially as a cause of inflation, but that really hasn't been the case for this inflation that we've been experiencing post-2020.
Well, what would you say are some of the causes of some of the inflation that Americans have been experiencing over the last 2 or 3 years?
What are some of the causes?
Yeah.
Yeah, so really, again, that supply and demand misbalance. So with the pandemic, as we all, very viscerally experienced, there just wasn't enough things. Supply chains completely broke. Trucks were not able to get to where they needed to go. Boats weren't able to get to where they needed to go. And so if you think about the economy as a supply chain, right? So let's say I get a cup of coffee in the morning, and so my beans have to come from, let's say, like Africa. And so if the beans can't come from Africa or they come slower than normal, that is going to put pressure on my cup of coffee price. And so it's kind of all of these different things along the supply chain that impact the prices of the goods that we consume and services. And so now in the United States, we're experiencing a lot more services inflation. So there's goods and services. So goods being that cup of coffee that I just referenced. Services would be the cost of getting like a haircut, different transportation services, just really anything that requires human-to-human interaction. And those have started to increase in price because wages have started to increase in price because goods increase so much in price. And so we're experiencing a lot of different layers of inflation across the world right now.
Well, news media says very often that inflation has gone down, but the effects of previous inflation are still present. It's not like things are becoming more affordable or that shrinkflation is going away. So in what ways is, inflation returning to close to nominal levels good, and why is it maybe not fully corrected?
So the inflation that we've been experiencing over the past 2 years has been largely cumulative. So when we hear that inflation is going down, we oftentimes think that that means that prices should be going down, but that's not what that means. So inflation going down just means that things are getting expensive less fast. So things are still going up in price, but they're just not going up in price as quickly. Prices actually going down would be something called deflation. And that's not really what we have in most sectors of the economy. And so, yes, it is true that inflation is going down, and it's very exciting. We definitely don't want to have the 9% inflation that we had, in the tough years of the pandemic. But things are still expensive. And the tough part about prices is oftentimes they're sticky. And so if the box of cereal that you purchase goes up to $7, it's going to make it the company is not going to want to lower the price of that box of cereal. It's the same thing with energy costs, et cetera. Um, and that's kind of what we're experiencing now is that, yes, things are not getting expensive as fast, but they're still very, very expensive. And so when we talk about consumer sentiment or how people are feeling about the economy, that's why people are feeling bad is because, yes, like things are getting better, but that doesn't necessarily mean that they're good. And that's the tough spot that we're in right now.
I think I misunderstood your thesis. If I understand your thesis correct, and please do correct me because I've only read the first third, your thesis is the economy is doing a lot better and that people are doing a lot better than maybe they were before, but that people feel that they're not doing as well. Is that correct?
Yeah. So those two things can coexist. Things can be still very expensive. We can have structural affordability. I talk about this later on in the book. We can still have structural affordability problems. The issue with the economy right now is that things are good. Like the economy is good. Inflation is improving. Part of the reason that consumer sentiment metrics are, trending downward is because of, high prices being a pressure cooker, a housing crisis specifically in the United States. But it's also a disconnect much larger than it should be. So relative to where the economy actually is, people should be feeling a lot better than they are. But that doesn't mean that things are perfect, right?
Right.
Nuance
Sure.
is the most important thing to understand when you talk about the economy. Nothing is ever black and white. It's always granular. And so those two things can coexist.
Well, housing has dramatically increased in value. And, as someone in China thinking about eventually coming back, I'm like, oh my gosh, I don't know if I can come back. I don't think I can afford America looking at house prices. Is this good news for potential homeowners that housing has increased in cost?
No, not for potential homeowners. It's good for current homeowners, and it's created a lot of issues for those wanting to enter the housing market. And so there's essentially, this is very reductive, but there's two main ways to talk about home prices. One is the mortgage rate, so the cost of borrowing money to finance that home, because most people, can't put up 500,000 US dollars to buy a home. And then there's the actual price of the home, so the 500 US dollars. And so mortgage rates have skyrocketed because the Federal Reserve has been raising rates in order to battle inflation. And so mortgage rates are, almost 7-8% in the US. And so it's essentially $1,000 more per month to finance a home right now if you're trying to enter the market. But also home prices have increased substantially. So the average home increased in price more than the median wage between 2020 and 2021. So the median wage in the US is like $55,000, I think, maybe a rounding error in there. And the average home went up by more than that, or the median home went up by more than that. And so we have this huge issue in the US where the main way, and really, in the UK too, they have a very similar problem, where the main way to build wealth is through a home. If you look at the distribution of financial assets, a chart from the Federal Reserve, you can see that the bottom 50%, all of their wealth is tied into their house. The American dream is predicated on the idea of owning a home. And so now you have all these people who the only path that they know to wealth is becoming more and more out of reach, both because of mortgage rates, which is a new issue because of rates being so high because of the Federal Reserve, as well as extremely high home prices. And so it's really quite a tough situation.
Well, in a recent podcast, you talked about how we can potentially, some ways that we can fix the housing crisis. Could you summarize some of your main points? Or, I mean, what can we do? I mean, I think a lot of Americans are thinking, can't we just build more homes, or what are the steps that we need to take as a country to make homes accessible for everyone again?
Yeah, I mean, I think the biggest thing is building more homes, and that's tough because there's all sorts of things in the way. Zoning is a very popular thing in the US, zoning laws, and that makes it difficult to build residential areas in some places. It makes it difficult to build skyscrapers. A lot of cities have a cap on how tall
Mm,
buildings
mm.
can be.
Yeah.
There's a lot of parking lot minimums, so you have to have a certain amount of parking spaces per person. And in fact, the average car in the US has more space than the average person, which is quite crazy. So the U.S., the biggest thing that we can do is build. But
Mhm.
there are things in the way. However, I interviewed the Deputy Secretary of the Treasury, Wally Adeyemo, about what the U.S. Treasury is doing and the Biden administration, what they're doing to incentivize housing. And a lot of it is funneling money towards building more homes, enabling different incentive packages so developers decide to pick up housing projects that maybe they wouldn't normally touch. And then also, we're starting to see a lot of government intervention on the local level. So, Montgomery County, Maryland is a very good example of a government that was like, okay, we're just going to intervene in the housing process. We don't need a 20% profit margin like a developer does. So, we'll just take over and then we'll, subcontract the project out. And they've been very successful at building housing. They built a 463 unit building, and they're building two more, one specifically for low income seniors. And so it's just we have to build and we have to incentivize
Mm,
building because it's a capitalist society and it runs on incentives and business models.
mhm,
And I think
mhm.
we're going to start seeing a lot more building soon, hopefully.
The example that you mentioned kind of sounds like what we have in China, an SOE, a state-owned enterprise, where they're
Mm.
managing certain affairs in the interest of people. So, I mean, I'm fascinated by that. I'd love to learn more about it in the future. I have actually a different question than the ones I planned on asking you. Here in China, we have tons of high rises, and you mentioned building caps. I'm from San Francisco, and there's definitely building caps. That's why it looks like there are a lot of tall buildings, but it's just hilly. So like you looks like wow, everything's really tall, but those are just the buildings on the top of the hill. Is there a way, maybe as an America politically, for us to cut some of that red tape and just start building some condominiums, not for the rich, but for the rest of us? Is that a possibility?
Yeah, yeah. I mean, Austin, Texas is a very good example of a city that has just built. They kind of ignored different zoning laws and have just built and, have sort of worked around parking requirements, have worked around different minimums. And so it's definitely possible for cities to build. San Francisco is probably like the worst city in the US in terms of building. There's so much NIMBYism there.
Mm,
There was a
mm,
project that was blocked recently because people wanted to preserve the value of their waterfront property, which is sad. And that's also the issue in the US is we have a lot of NIMBYism, not in my backyard. And so because the
mm,
main way to build wealth in the US is through housing, for whatever reason.
mm,
Historically, it's quite interesting. It's not always been the case. The housing went up by like 0.06% from 1860 to like 1960. Again, perhaps a rounding error, but it hasn't always been this thing that would skyrocket by like hundreds of thousands of dollars.
mm.
Um, so NIMBYism is a very big thing, especially in San Francisco, where
Yeah.
people are like, I want to, retire on the value of my home.
Mm,
And there'll be a lot of older people who block new housing projects because they'll say, oh, I want my home to be worth $3 million and I don't care if no one else gets housed.
Hmm. Well, people are also choosing between rent and essentials. So my question is this, and this is something I really want to understand better. Is the middle class shrinking, and if it is, can we turn it around? Because you mentioned it's a vibe session. I'm not really sure if I'm using your term correctly, but like people have a feeling that maybe the middle class is shrinking. Is it shrinking, or are people doing okay?
So I did a piece on this for Bloomberg Opinion, and the middle class is shrinking, but that's because people are moving into the upper income quartiles, not because people are moving into the lower income quartiles. So what's been really interesting about, and again, U.S. specific here, but what's been interesting about the U.S. is that lower wage workers have actually seen the largest wage increases out of any income group, and that's surprising, I think, because they've been left behind so often, but because of the need for work in that category, we have seen wage increases by like 6.3%. far faster. I think it's over the past, since the pandemic started, 6.3% perhaps, or perhaps it's over the last year. But anyway, like very large growth. That's quite a big difference. So I'm sorry for not knowing the specifics. But anyway, so in terms of the lower income group that has been experiencing wage increases, and a lot of people from the middle class are moving into the upper income class. But I would say that the reason that people, and it makes sense why people are feeling bad about the economy, is because it in the US, we're very used to sort of this like steady path of upward mobility.
Mm.
And
Hmm.
it's that with inflation and with the housing crisis, that's just felt farther and farther away. Wages have been increasing, but that
Hmm.
has been negated by
Hmm.
inflation and by the housing crisis. And so I think it makes a lot of sense for people still to be feeling bad. And the concept of the vibe session, again, is that disconnect between consumer sentiment and economic data. Um, and uh, and the idea, after refinement, is that it does make sense for people to feel bad about the economy, but things could be far worse. But it's all relative,
Hmm.
and
Hmm.
that's not always a comforting thing to hear.
I mean, Yellen was celebrating that U.S. GDP grew faster than any other G7 country in 2023. My question is, and maybe you don't have the answer, but I just have a lot of questions. I guess that's why this suits me. But you're talking about the lower income part of the United States is making 6.3% more than they were during the pandemic. Annually, I'm guessing. So if CPI
Mhm.
is increasing maybe around 6 or 7% average, the two are kind of canceling each other out. So you're still able to buy all the things that you were before, if I'm understanding things correctly, but you're being paid more and then also spending more. And then that makes you feel potentially like, oh, I don't really have that much money, even though you're maybe in the same place you were.
Yeah, I mean, that's kind of the issue at hand. And what's interesting is that in the US, a lot of the companies are starting to roll back prices. So McDonald's, which is meant to be like this place to go for a pretty cheap meal that's decent, they raised prices by like 20%. And so they saw a lot of pushback from consumers, because consumers were like, what are you doing? And McDonald's was like, oh, we have to. But now they're offering this $5 meal in order to gain back the consumers that they've alienated. We see the same thing with Target, with Walgreens, etc. And also, there's the DOJ, the Department of Justice, is levying an antitrust lawsuit against elements of the rental industry, against property management companies. So Cortland Management in Atlanta, Georgia, just experienced a dawn raid because they've been doing algorithmic price fixing. And so I think that a lot of the price pressure that we've been experiencing has been companies like Walgreens and Target and McDonald's raising prices and alienating consumers, as well as algorithmic price fixing from these rental giants like RealPage. And so I think that's also what consumers are having to deal with, is like, yes, things have gotten more expensive. Like the average cost of goods absolutely has gone up. But now I think we're starting to realize that that's been exacerbated by what the actions of companies in order to preserve profits.
Well, okay, can we quit that? I mean, I don't understand algorithmic price gouging. That sounds really complicated. So they're using AI essentially. How does
It's
that work?
No, it's not that complicated. Essentially, like all the different systems, so the rental systems are like talking to each other. They're like, what's the vacancy rate? How many units do you have
Oh.
available? What price are you going to charge? And then it'll spit out a price that the rental property should charge new
Hmm.
tenants. And that price has been pushed upwards over time. And so it's just basically using data to artificially inflate prices.
Mm, mm, mm. Well, you've
Across
argued
the
that.
board.
Oh,
Yeah.
right. I
Yeah.
mean, I
Sorry.
think it kind of sounds like Hotel.com and where they all say we're going to beat each other's prices. Kind of sounds like that. But honestly, I know you're explaining it well, but I'm going to just say that's going over my head anyway. But you've also argued that 6/10 of workers' wages have kept up with inflation, but does that mean that 40% of wages are slipping behind?
Yeah, I mean, so this is the thing about the economy is it's such a personal experience. But yeah, I mean, there's rolling recessions in tech and finance, right? And those groups have experienced huge, like tech specifically, huge wage increases, like over the past couple of years, not necessarily right now. And so there are sectors of the economy that are not doing well. Again, nuance is the very important thing
Hmm. Hmm.
to remember here. So tech and finance are struggling in a lot of ways, a lot of layoffs across tech companies. But when you look at healthcare and hospitality, they have been growing tremendously. And so of course, like not everything is going to move in tandem. Parts of the economy are cyclical, and that's kind of what we're talking about here with wages as well.
Wow. Okay. You in your recent book, "In This Economy: How Money and Markets Really Work," we wanted to know what prompted you to write this. What is? I mean, I think we understand your thesis, unless I'm misrepresenting it. What was your purpose in writing the book?
Yeah, so the purpose of the book was to serve as a foundational toolbox to help people understand the economy. So I consider myself a consolidator. I just gather research from others and sometimes remember the statistics that I'm citing from memory, and sometimes I don't. But with the book, I had all references available. There's very good economics beginner guides like Basic Economics, Economics in One Lesson by Henry Hazlitt. But what I wanted to do was make something that was quite fun and quite accessible. So there's 60 illustrations in the book that are done by me in order to sort of guide people along on the economic journey. And I just wanted people to have a reference guide to understand the economy, because I think it's one of the most important things that we do as a citizen. It's our civic duty to understand the world around us.
Mhm.
And I wanted to help out with that as much as I can. And that's my job
Yeah.
too, as
Mhm.
an economic educator. So.
I think that's a fantastic idea. What do you? I mean, I want to ask you a couple other questions. In high school, we're not really taught about finance. We're not really taught about economics, unless you're planning on doing that, or you're in a kind of special school. Most high schools don't teach that. Do you think that most Americans should be taught, basic finance and basic economics?
Yeah, so I'm one of those Americans that wasn't taught that. I didn't even know finance was a major until I got to college. And I was lucky, like I traded options in high school, so like I had some exposure. I just had no idea it was an industry. I just didn't know anybody in it. Grew up in Kentucky, and so uh, I think it's really important that there is some exposure to basic economics, to basic finance, and I think a lot of really really smart people are thinking about that, but the way that we teach personal finance maybe doesn't feel applicable to a high schooler, because you're teaching budgeting, etc. But when you're in high school, you don't really have that much money, and so it's like, okay, I'll think about a budget, but I don't really know what to do with this. And so I think it's just, again, like exposure and iteration. I think
Mhm.
just here's how the Federal Reserve works, here's how money works. It's very similar to like biology, right? Like all of us remember that mitochondria is the powerhouse of the cell. I think
Mhm.
you just have to have that foundational knowledge of the stock market, of the bond market, and then that'll just give you the tools to enter the world a little bit more prepared.
Well, I have another question since you're mentioning interest rates earlier. Do you think in the coming year that we're going to see interest rates from the Fed come down? Because if I understand, before you answer, I understand they were about to come down, and then inflation went back up a little bit, and so now there's like it's a question instead of an answer.
Yeah, it's definitely tough. I think the Fed wanted to cut rates. They want to cut rates. Inflation is much closer to their goal than it has been, but it's not quite there yet because, as you said, inflation did experience a little bit of an uptick. We got a pretty good print in personal consumption expenditures (PCE), which is the primary inflation metric that the Fed looks at in order to gauge where inflation is going. But it's just not quite where anybody wants it to be. And what's especially tough right now is that we have an election in the US
Mhm.
coming up in November. And so for the Fed, it's going to be a little bit harder to design policy into a world of such uncertainty. And so I think most markets are pricing in, some people are pricing in, meaning that they're expecting, pricing in is expecting, um, thinking about a September cut, but I think a lot of people think the cut, if it does happen, will happen in December. We've had a lot of improvement in inflation, and hopefully by December we'll see where the country is at, and if inflation is closer to where the Fed wants it to be.
I want to ask you some more layman questions because that's exactly where I am. If the Fed cuts interest rates, what's that going to do to the cost of housing? Is that going to make it more accessible because interest rates will come down on homes?
That is the goal. Yeah. So what's funny about housing is that housing has been a big driver of inflation. Shelter costs, so rent and home
Mm.
ownership costs, have been like 70% of some CPI, another inflation metric, consumer price index, has been primarily driven by shelter costs. And so if the Fed has been raising rates in order to battle inflation, that's been pushing mortgage rates up, but it's also made it more expensive to build homes, because to build a
Mm.
home, you usually have to take out some element of financing,
Mhm.
where you have to and it's just, money is more expensive when rates are
Mhm.
higher. And so I think what might happen is when the Fed begins to cut rates, mortgage rates will go down because they'll follow the path of the Fed funds rate. Um, and also it should be cheaper, hopefully, to build homes. And so I think that'll put downward pressure on housing. We'll see, but I think that's the ultimate goal. And I think that's kind of the funny spot that the Federal Reserve is in, is they have this toolkit, which is rates in their balance sheet, and their primary tool to fight inflation might have been causing some elements of inflationary pressure, because higher mortgage rates, higher costs of financing, or higher
Wow.
costs. Yeah, right? Isn't that kind of bizarre? And
Yeah.
so we'll see if they actually cut rates. It could expedite their inflation fight.
Okay, so I'm not sure. Did you come up with the term vibe economy? Did you coin this term?
I don't know if I coined the term vibe economy, but I coined the term vibe session.
So what is a vibe session?
A vibe session is a disconnect between consumer sentiment and economic
Um,
data. And so it's kind of this idea where, like GDP, how we measure the
mm,
economy is going okay, the labor market's okay, inflation is going down, but people are feeling very, very bad. And so since publishing the book, I published a few more articles on my newsletter about, sort of the socioeconomic aspect of consumer sentiment, because people don't look at GDP to gauge their happiness.
mm,
They look at a lot of other stuff. And so
mhm,
a lot of my
mhm.
research is just around that disconnect and how we can explain it.
In terms of the disconnect, there's a common one that us laymen's have, and that is it seems like one of the primary metrics that's used in the United States for how the economy is doing is the stock market. But, millions, tens of millions of Americans don't have any investments in the stock market, and they feel left out of that conversation. So when they be reflecting on, is my economic condition well or not, and then they turn on the news and they're talking about how well all of the people with capital investments are doing, the two things don't seem to go together. And in fact, there's a lot of frustration that people talk about around this topic.
Yeah, so 62% of Americans own stocks, and it's a very select group of Americans who do own stocks, like usually college educated, upper middle class. And it definitely is frustrating, I think, because the stock market is not the economy. The stock market is influenced by the economy, but it's not the same. And I do think it can feel really frustrating when people feel left out of that conversation, or it feels like, oh, these companies are just going up because they're raising prices on me as a consumer, and that feels bad. And so I think it's definitely a point of frustration for people. And one of the ideas that I explore in the book and in my other work is like, we kind of have to help people get invested in the stock market and in the bond market, because right now, as we were talking about, the housing market is the main way to build wealth. But if you
Mhm,
look at the bottom 50%, all their wealth is in housing. But if you look at
mhm,
the top 10%, all of their wealth is in business ownership as well as
mhm,
equity, so stock ownership. And so I really think that we have to think about, like, how do we set up people for success? And that
mhm,
is through exposure to the stock market. It goes up 53%
mhm,
of the time. It's a great way to preserve wealth during
mhm.
inflationary periods. And I think that's kind of also where some of the disconnect comes from, is that people are watching this thing happen and have no idea and it's not their fault, but they have no idea how to enter it. And it makes total
Mhm,
sense to
mhm,
be mad
mhm.
about that. Yeah.
So in your, I think you bring a really important point, because the older I get, the more I realize that if you just leave your money there and you don't mess with it, it's an index fund. Over a long period of time, you're going to have excellent returns, especially if you start young and you're pulling it out for retirement, or you following the rule of 4% or whatever. Do you cover how to do that in your book?
I don't necessarily talk specifically about how to buy stocks. It's not really a personal finance book. I talk about
Mm,
the stock market. I talk about, what it looks like to invest. But my big thing with investing is I think you need to, buy like index funds, ETFs, buy a little bit of bond exposure, maybe some crypto exposure if you want to diversify in that direction. But it really is just keeping it super duper simple. So I don't spend a lot of time on it because I think it's kind of a few easy steps, which I do discuss, but not a lot of time on
you,
that.
I was going to wait for later about cryptocurrency, but you have a section entitled "Where did cryptocurrency go wrong?" So, could you elaborate? Is cryptocurrency a good investment? Because it is wild watching it go up and down for us, laymen's.
Yeah. So I used to work in crypto. I used to be quite excited about it because I really love the technology. Like blockchain it's pretty cool if you get past the
Mm,
noise of the industry, but the problem is the noise of the industry. And so that chapter talks about the failure of FTX, right? It talks about the failure of all the different crypto companies, all the NFTs, all the different projects, just sort of the pump and dump culture that has really made its way into crypto. And so I own crypto, like I own a little bit of exposure to Bitcoin and Ethereum, just because I think it's a good diversifier. And there are Bitcoin ETFs now, so you can have institutional exposure to Bitcoin where it's like more safe. It's like companies like BlackRock. I believe Fidelity has one as well, and so that's like one way to think about it, right? Like these big companies are investing in it, so theoretically it should be relatively safe. But I
mm,
think crypto is just another, it's like a version of gold, right? Like it's digital gold.
yeah.
I don't really expect it to do much as an industry, unfortunately. If it does, I'd be very happy. But I think there's been so many bad actors and so much evil behavior.
I have a different kind of question. You mentioned following BlackRock and Fidelity because obviously they're going to invest in things that their professional economists think are going to do well. So if they're investing in something, it makes sense to maybe copy them. There seems to be a movement lately to copy congresspersons' investments. What do you think about that?
Yeah, so my friend Chris owns a company called Autopilot that does just that. I mean, it's interesting because some of the trades that the Congress people are doing are rather complex. Like a lot of options trading, where I'm like, okay. I think it's kind of I- I'm not educated enough to have like a fully formed
Mm,
opinion on the specific
sure.
subject,
Yeah.
but I do think it's quite bizarre that politicians are able to trade. Um, that should not be legal, probably. That's my take on
Yeah.
it. But some of the trades are quite profitable.
Yeah, actually, that's my opinion as well. I don't like to throw my opinion too much into the show, but since you mentioned it, I agree with you. It doesn't seem like our political leaders should be investing in things that they have control over. But I want to switch a little bit up. You mentioned discussing rethinking the dollar. I don't want to put words in your mouth. So, what do you think about international dollar order right now?
Mm. I mean, I think it's quite an interesting time geopolitically. You know that too, being in China. The U.S. has levied some tariffs against China recently. We seem to be deciding to do a lot of reshoring, a lot of friendshoring. We're just basically pushing a lot of manufacturing back to the U.S. And so, in terms of the dollar, I think it's still like reserve currency. It's still number one. The U.S. is still like the big bad kid on the block, but it's interesting. I think that a lot of people have written about this topic, but the story of the next few years is going to be one of polarization. It's going to be one of bifurcation. And I think the dollar will survive just because the US is so strong. But I might be biased there. I think, the section then goes on to discuss like what could replace the dollar if that does happen, which I don't think it will, but it's going to be a basket of little currencies. It's not going to be
Mhm.
like the ruble or something. Um, yeah, as far as we know. And so I think that's, if anything does happen, it will be just a segmentation of the world. Like, we had so much movement towards free trade, we had so much movement towards working with one another, and we're moving backwards, which is a bummer, I think, in terms of what we could accomplish if we got along better with one another. But that's probably idealistic.
Yeah, I'm pretty idealistic as well as an American. And China, I really, I mean, okay, okay. When I grew up in the 1980s in California, the we were always talking about solar. We were always talking about EVs.
Yeah.
And now, affordability just makes sense as because I'm a middle class person. So like, I want things to be affordable. So my wife, she's getting her driver's license for the first time, and at a middle age kind of age, and we're finally going to get a car because I never bothered to get a license out here. I was just like, oh, just forget it. There's subways and stuff. But the car that we're thinking about buying is 50,000 RMB, which is $7,000, and
Mhm.
is a brand new EV here in China. And you can't get this in America. And that kind of frustrates me because I grew up in California where we were talking about everything's going to be solar panels and EVs. And we really still aren't there yet. We're still not at a point where, and I get frustrated when the US is throwing up these tariffs. I'm sure that there are very legitimate reasons about wanting to bring back manufacturing and things. These, they make sense. But as someone, thinking from a Californian perspective, I certainly want an affordable car. I certainly want more EVs on the road. I certainly want more solar. And by the US and China not always getting along, it can be frustrating that those things are not being easily accomplished.
Yeah, no, it's American car man. So I'm very much, I don't drive if I don't have to. I bike
Mhm.
everywhere. But I think, like, what the Chinese EVs are doing so well is they're embracing Fordism, which is Henry Ford's idea that, like, car prices should go down. It shouldn't be so expensive to get a car. But in the US, Western car manufacturers are like, what if we added every single feature, made the car so big that it could run over six toddlers and not even notice? And it's just like, and we ignore, like, the benefits of electric vehicles in favor for the internal combustion engine. And it's very disappointing, and it's very sad, and I think a lot of people would love to have the China EVs here because they are pretty well produced, and there is a mindset that Henry Ford would celebrate, where the price should go down. Like, it shouldn't be so expensive to have a car. I'm reading this book called Paved Paradise, that talks about
Yeah,
how
yeah.
US. Yeah, so it's very, very good. I highly recommend it because it talks about how the US has become so car centric, so car dependent, that number one, like, we're not embracing EVs. And then number two, the cars have completely taken over our lives. And
Mhm.
yeah, I think, like, car culture in the US is kind of this, like, hidden economic thing that
Mhm.
causes so
Mhm.
many issues that we never really talk about because we don't know how to fix it. Because if we're trying to build high speed rail in
Mhm.
California, right? It's
Yeah.
like billions and billions of dollars, and it's taken
Mhm.
45 years. Like, yeah, it's
Yes.
it's quite ridiculous. Yeah. Yeah.
I actually wanted to bring that up, but I didn't want to overwhelm you with a bunch of questions. But in terms of high speed rail, when I get in discussions with other Americans online and say, "Hey, well, we have it in China, we should be able to build that in the United States." I mean, for me, the frustration, the before we even get to the argument, as an American, I know the problem really is red tape, and there's so many people, there's homes and property and real estate and all these complex laws and things, and so that is holding us back. And that is probably what makes it so expensive and what makes it so slow going. But there's also sentiment among Americans that we don't need high speed rail because we have the best interstate, system in the entire world, which is true. They're like, oh, we fly, we don't need high speed rail. And so I get frustrated as someone who cares about the environment because high speed rail is way more energy efficient than everyone driving across country. Although driving across country is also an American tradition, I mean, just not to do it all the time. It's amazing in China, you can jump on or Japan or even Europe, everywhere. You can jump on high speed
Anywhere
rail and
but
just
the US.
go like, yeah, basically go 1,000 kilometers for like nothing. And the impact on the environment is like 5-10% of the impact of driving a car or flying in a plane. And it's like, we need to get past the idea that high speed rail is some evil or some bad, because the other problems, the red tape of it, those issues are still going to be there anyway. Although I do understand, maybe you don't know about it, there is a new high speed rail project from Los Angeles to
Mhm.
Las Vegas that is looking really like possible, and maybe it's going to get done
Yeah.
very quickly because there's an Olympics coming up, maybe in Las Vegas.
In Los
So,
Angeles. Yeah.
or in
The
Los
Olympics are in,
Angeles.
yeah, yeah, yeah. And yeah, I mean, it is really frustrating. And it's like the toxic American individualism, right? Like people, it's wild when you're in the car on the highway and you're in like standstill traffic and you look around and there's just one person per car and you're like, what are we doing? Like, how did we get here? And I think people will go to Europe and they'll be on these European vacations and they'll be like, we walked around, we took the train, it was so lovely. And then they come back here and they're like, but I need my car. And I
Mm.
don't know if it's like Costco culture where we go to the grocery, have these huge hauls. Like suburbs are very much a big thing here in the US where you live so far away from your neighbors and from the center of a city. But I think it'd be wonderful if we could embrace different forms of transportation. I try to take the Amtrak, which is like the closest thing we
Yeah, I
have
love the
to.
Amtrak. Yeah.
Yeah, I try to
Every
take
time I
that
come
as
back
much
to
as I
see my
can.
mom, sorry
Yeah.
for interrupting
Oh
again.
no.
Every time I go to see my mom, I could rent a car, but I just land at the airport and then I get on Amtrak to go to where she is. It's very
Yeah.
convenient. Like you just read a book or whatever
Mm,
and watch the countryside go by. It's quite lovely, actually.
yeah. Yeah.
Yeah, I
It's
wanted
pretty
to ask you
easy.
because from an economic perspective, the United States is a massive producer of gas and oil. And so that maybe the big oil companies don't want to transition to electric vehicles, or they don't want solar coming in because they're making an enormous amount of money selling oil. Is that
Oh
it?
yes.
Or am I just trapped in the 1980s?
No, no, that's quite it. Yeah. I mean, I think there's all sorts of incentives, and for them, like, fracking was huge here in the US. And what's really interesting is the fracking companies in the 2014 sort of time zone. They fracked a lot and they lost their shareholders a lot of money because they just kind of like overproduced and lit a lot of money on fire. And so now the shareholders are like, you better return us a lot of money. And so it is definitely an incentive for the energy companies here in the US to remain focused on fossil fuels at the expense of the long term health of the citizens.
Mm. Going back to consumer sentiment and vibe session, disposable income. Do you know, is disposable income increasing? Because we were talking about, inflation is increasing, wages are increasing, and they're roughly matched, but not, obviously in a nuanced way, like you mentioned, depending on what field you're in, your age, all these things are factored in. But like, is disposable income increasing or decreasing?
Yeah, real incomes have increased across the board. So people do have money. The savings have been relatively steady. We're starting to see a drawdown in savings in the post-pandemic world, where people have like spent through what they saved up, and we're also starting to see an increase in credit card delinquencies. So incomes have been rising, inflation adjusted, but the savings that people had are being dwindled, and then also credit card debt is being defaulted on. So
We have the opposite problem in China, where Chinese people tend to be super savers. So what I understand is
yeah.
the average savings is like 40%. So Chinese people
Wow.
have tons of money. Yeah, but this is a problem. It's not, it's
Yeah.
not something to look like wonderfully on, because the government here in China is really trying to get people to spend more. They're
Yeah,
like,
I
please
know.
spend more of your money. So like United States seems like they're spending so much that they're going into debt that they can't afford, and they're, defaulting on credit card debt. And in China, they're saving so much that they're not increasing consumer sentiment fast enough. My question is for the United States: with all of this spending, is that better for the economy that Americans are spending more than they have for the total economy, or is it worse because people are going to have terrible credit and then in the coming years not be able to afford as much to buy as many things?
Yeah, no, it's great right now. A jubilee is always a party until it ends, and I think that's kind
Mm.
of what people are worried about. Is like what happens when savings run out. Will wages be able to sort of offset the cost of inflation? What do we do kind of when we're outside of the stimulus check drip era, right? And so I think that is definitely a point of concern. The U.S. consumer saved the economy. Like there's this little meme, like never bet against the American eater because they'll eat everything and they'll spend a lot of money on restaurants. And we have
Mm.
seen that people are going out to eat, even though they're saying they're not. They are. So yeah, like people are spending a lot of money right now. People are doing relatively fine. We're not seeing like any red flags in credit card delinquencies. They're just starting to tick up. Savings are still relatively, okay, even though they're falling. It's not like on catastrophic levels yet, but yeah, it is an interesting difference between the U.S. and China, is because China, for whatever reason, won't stimulate the consumer, but the U.S. knows how to stimulate the consumer for sure.
There is hope for China, because it turns out Chinese spenders love to spend when there are tourists. When they put themselves in the role of tourists, usually overseas in the past, they
Yeah,
spend
yep,
a
yep, yep.
lot of money. But now
They do.
China is kind of like getting Chinese people to travel domestically and spend in
Mhm.
the domestic market. So that may be one of the tricks that they're going to use to get people to spend a lot more of their savings here. I wanted to ask you a couple more questions. Student loans, because during the pandemic, people didn't really have to worry about their student loans. Well, some people did. They had private loans to private banks, and their student loans kept going. But for the vast majority of people, I think it's almost $2 trillion in debt total. They didn't have to start paying their student loans back until a couple of months ago. I think they still might actually have until this year fall, to actually have to start paying again. Do you see, 45, 50 million Americans suddenly having their student loans tick back on as being a disturbance for the US economy?
Yeah, I think it's essentially on average like it equates to a 5% deduction in income, like spending on student loans and having to have those payments go back up. It's also heavily contributed, I think, to the perception of the Biden administration. They have forgiven a substantial portion of student loan debt, but of course, the Supreme Court outlawed elements of it. So it's a mess. Like, it's really, this is very much a symptom, not a cause. Like, the cause of what's happening is the cost of a college education is exorbitant. There's bureaucratic bloat. It makes no sense to pay like hundreds of thousands of dollars per year for education, but you're paying for administrators to have little offices and stuff. And so I think that's kind of the issue, is like student loan debt is going to tick back up, but we're not addressing the main problem, which is the cost of college education. And we're still saying to 18-year-olds, like, here, take out a $250,000 loan. Good luck. And it's really contributed to financial nihilism. So people, sign these huge loans for, $250,000. In the US, it's like a lot of money, right? And then by the time they graduate, they're like, money's not real. Like, I don't even know what to do anymore. I'm not going to save for retirement. Like, I'm just going to see what happens. So it's really, yeah, student loans are quite a complex problem because of all the impacts that they have.
Hmm. Next question. I don't think we can answer that. I have a lot of more questions about it, but I don't think we're going to solve it here. I think there needs to
I
be some
wish.
substantial changes that the Congress takes on, or maybe the market. I don't know how that's going to work out. It's
Yeah.
kind of troubling. They can't just
Yeah.
erase all the student loans either, because the problem, like you said, still exists. And so then, okay, you erase a bunch of student loans, the next generation is still going to have the exact same problem that this
Mhm.
generation is having. So underlying issues are clearly need to be addressed somehow by someone in some way.
Yeah.
My next question is about the U.S. debt. When us normal people, we look at this gigantic number. I think it's like $34 trillion in debt, the national debt. Is that a problem for the United States? Because I hear two different stories from people. I hear, wow, what the heck, this is out of control. And I hear, this is normal because the U.S. works as a fiat, system. So is it as bad as the naysayers say it is?
Yeah. So the US debt, I've always been in the camp like the government should have debt. That's what they do. They spend money on the populace. The main way that the government makes money is by taxing people and by issuing bonds. They've issued a lot of bonds recently, and they haven't really done much with taxes in terms of raising them. But I think what the big problem with the US debt right now is that like the income sources are relatively okay. We're still getting money from taxes. We're still getting money from bonds, but interest payments are quite high. So the Federal Reserve
Mhm.
raising rates in order to battle inflation, that impacts the debt that everybody has, including the US government. And so now the payments on that debt is quite high. It's on track to surpass the payments on defense spending, which is alarming, right? And so that's the thing. Debt used productively is great. It's awesome
Mhm.
because that means long term it's going to return money back. But if it's used on just paying back, like paying interest on the debt, that's not productive, and that's where things can get quite bad. And so I'd say that's my take, is like not all debt is bad, but
Mhm.
the composition of that debt relative to the interest payment on it is what really matters.
That actually does make a lot of sense from not from a government perspective because it's probably too big for me to understand. But when people open a new business, the first thing they do is go look for a loan. We see this in TV shows, you see this in movies, you see this in real life. People go take out these loans because that is going to essentially help them produce the product that whatever it is, a coffee shop or whatever they're going to be making. You need to take on that debt, and that debt can be good debt. I don't want to say that to too many people out there who are taking student loans. You should be careful about what you're signing up for. But in terms of when the Fed drops the rate, does that mean that Treasury? Because I don't know when the Fed drops the rate eventually, maybe in December. Does that mean that Treasuries also go down in value for international investors like Japan or the UK or whatever?
Yeah, the yield won't be so high, so it won't look as attractive to international investors. So that'll be definitely something that might happen when rates drop. Yeah,
So
there's
when
been
that
no.
money, sorry,
No, go
when
ahead.
the money when the money comes out of treasuries to some extent, I know there people want to, these governments and big corporations, they want to maintain diversity, so they're going to obviously keep some U.S. treasuries because they're considered very, very stable for decades. If they take some of that money out, where does that liquidity going to go into stocks, other investments, and is that going to spur economic growth?
If they decide to sell U.S. Treasuries.
Yes.
Yeah, so if they decide to sell U.S. Treasuries, that money could go into the stock market. It's been interesting. There's been less foreign buyers of U.S. debt recently. Like Japan has sort of pulled back because Japan is dealing with their own situation. China has pulled back as well. And so you kind of see that allocation going toward various infrastructure projects, depending on whatever's happening in the certain countries. I can't speak to the specifics, but
Hmm.
yeah, it's like U.S. citizens have bought up a lot of government debt. I've bought up government debt from the Treasury. But yeah, it's not as attractive to foreign investment because of kind of the geopolitical tension, perhaps.
I have another question. Maybe you don't know have all the answers, but since I have you here, I'm just going to keep asking you. Um, you know, with the treasuries are related to the dollar, so if there are slightly less investments in the treasury and treasury U.S. Treasury bills, does that mean that the dollar is affected somehow?
Yeah, the dollar is always affected by elements of investment. I get into the specifics of it in the book, but yeah, like everything is definitely interconnected in terms of treasuries and currencies, or
Okay, so
any sort of
well,
government debt. Yeah.
so people who want to follow you, they can find you on Spotify. I'm assuming you're on other podcast platforms as well, like Acast or Apple. Yeah.
Yeah, I think so. Yeah, I'm on
So
YouTube as well, TikTok, Instagram, Twitter, LinkedIn. I have a Substack, kyla.substack.com, and of course the book is out now in this economy, available
um,
soon,
all right.
or on most booksellers. Sorry. Yeah.
Well, yeah, actually, I was going to mention I ordered your book, and I thought it would be here because usually I order a book in China, it's here the next day because we have really
Oh.
good logistics here. But your book isn't coming until August, and I was like I was
Oh.
waiting. I waited a week, I waited 2 weeks. I was like, what's wrong? So I checked it out, and it said 8/8, and so I guess I'm not getting it until August 8th. I think it's maybe because it's being shipped here from the United States or something.
There's like
But so
also
I had to read
different.
the. Yeah, I'm sorry. I just wanted to mention the reason I only read the first third is because that's what I could get on Google.
Oh. Oh dear. Yeah, there's like different international rights, which is like that's so my publisher Penguin knows a lot more about that than I do. But yeah, books are kind of funky in terms of where they go. And the book just came out a week ago
Yeah.
today. So
I
yeah.
mean, I haven't canceled my order. I'm just going to be patient, and then I'll be able to finish it then. So, okay,
Yeah, sorry it's taking
if
so
you could,
long.
do you have like an elevator pitch for your book before we go?
Yeah, it's for anybody who wants to understand the economy. It's meant to be fun and accessible, and I think a part of the issue that we have as a world is that we don't understand the system that we live in. And if we want to make the system better, we have to understand how the system works. And so this book will give you the tools, the knowledge that you need to know about the underlying system that you're a part of. So hopefully we can all make it a little bit better one day.
Fantastic. Thank you so much for your time. If you want to find Kyla, you can find her at Kyla Scan, Scan, Kyla Scan on X, on TikTok. You can find her podcast, Let's Appreciate, and you can find her book, In This Economy, How Money and Markets Really Work, on Amazon, JD, and other platforms. Thank you so much for your time, Kyla.
Thank you.
Hello.